Audio morning brief, November 15th, 7:49 a.m. Eastern Time, and this is of the stock market, U.S. stock market. I'm Rich Possum, a critical point. Okay, not much changes from the weekly update, which was lengthy last week, I realized, but tried to cover everything in detail there. What we have is that the market rallied nicely out of the call for a level 3 bottom last week, last Friday, in fact, and we made that call well ahead of the surge in prices, but it's quite possible, that you couldn't find that update fast enough or something. But very strong performance. The level 3 bottom is in. If it violates last week's low for the S&P 500, Dow Jones, NASDAQ, that would be a sign of a level 3 downtrend. However, we would want to evaluate that because maybe it's time for the next bottom, that it won't continue lower. It could also be a sign that something's wrong and the market really does want to go lower into that first half December time frame for a more important level 2 bottom. So last week's low is important, and if you need to raise that a little bit, you could use Friday's low as the next level of importance. Not quite as important. It is analytically. It's far more important than the low of the week, but the problem is most traders will just use the low of the week. Okay, the market traded above an upside objective of 46.76, pulled back last night and tested it. This will be for the S&P 500 futures, December contract, and now it's rallying again. And the model suggesting a level 4 top occurred during the night and is apparently not going to matter. The market's already up. We could be wrong on this, okay? And it could turn out to be a down day and a sharp down day, and then we would just use the high of the day for the level 4 top. And for the moment, we're thinking this market is giving us a clue. It does not want to stop going up. It's probably going up into the next level 4 top that's probably not due to around 2 to 3 days from now. And for new subscribers, the level 4 is the intra-week swing. It is a type of group of traders, but their trading can also be mimicked by lesser important and even more important traders, okay, for more important trends. So there is an interconnectedness of all this, okay, integration. Any rate, the next objective then for the upside is around 46.93, so it's very close to it. The next objective would be 47.08, okay? And we may want to revise these objectives. They were kind of old objectives that were met in recent days, as in like in last week, but they're still valid at the moment, okay? 47.08 is close to the record high, so you might as well just say there's an objective of the record high. And don't be surprised if it trades a little above it, and next thing you know, they sell it, but we want to then reevaluate because it may go higher still. It may not matter. All right? Now, as we zoom out with these intra-week swings as level 4s, we need to look at the intra-month or monthly type swing called the level 3. And the level 3 bottom last Friday, not necessarily at the low of the week, but I have an alternate forecast that says it was the low of the week. Doesn't matter at this point. And what it's suggesting is we're only about halfway through heading towards the next level 3 top. And we may only be a third, maybe even a quarter of the way through. So there's some time. It's possible this market is going up all this week. Now, it could also just stall out, but it really shouldn't have a nasty reversal down this week. It ought to be able to at least maintain what it's done. It ought to hold up near this record high. But the point is, the best forecast is saying it can be an up week, and it could move to a new record high. We don't have any evidence to say it will, but it's looking as though it will, okay? So this also means the recent high we called earlier this month, the level 3 top, and then a couple days later we said, you know what, that was also a level 2 top, a more important top. That's your type of top occurs 4 to 6 times a year, so it's intra-year, and it's more likely to have something to do with fundamentals economics, even though all of these trends have something to do with X fundamentals, meaning people, okay? So what we think is that there's a good chance that we really didn't call the top early, and this market's going to rally to a record high this week, maybe into early next week. So it looks as more like early next week is when we want to look for another level 3 top. And if it's a record high, then we will have evidence that, hey, we did not call the level 2, but unfortunately we have to try for it one more time, Okay? Meaning if the market's going higher 3 weeks from then, it's probably going higher still. And I'll explain that in a moment. But it should probably top, say, maybe it can top near the late next week, but I think it's going to be the following week. And then it's going to decline into a level 3 bottom due in early December, first half December, okay? And we may learn it's a little more complicated than that. It may go down, up, and down rather than just down. But the point is it could go into a level 2 bottom, something a little more important. We could see a 3% decline. We could even see a 5% decline. I doubt we'll see any more than that. Any return of the debt ceiling worries could make this market go down more. But without the debt ceiling, all of the macroeconomic, business, statistical stuff, the fundamental stuff, as a bias, it's bullish to very bullish. And all that should really occur is maybe some year-end profit taking in early December. And then what we think is going to happen is the market will rally late December into January for a Santa Claus rally, and may even rally all of January, so it goes beyond the Santa Claus definition. Okay? And the next more important sell signal, the level 1, should occur sometime January, February, with a bottom probably February, maybe as late as early March. And all of that's going to tuck inside a bull market, type of bull market that may last into summer to late next year. I'm more focused on a bull market that's probably going to last to 2024, and then the major long-term bull market that lasts for this decade. So we're explaining all the twists and turns throughout this bull market, okay? And that explanation includes there's still a chance for a sharp, sizable decline by early December. The key is, did we just see the top? And this market right now is just trying to come near that top. It's going to bump its head. It's going to chop around all this week and eventually down. Or is it actually going to go to a record high and then down? And the best forecast is it's probably going to a record high and then down. This market is that strong that it just wants to keep going. It wants to ignore any debt ceiling thing as just a nuisance. It wants to keep going. I think this market's going higher in early next year, but we just have to deal with the fact it is time for at least some of these traders to want to sell early December. And the key is, did they start selling last week or the week before or something, or are they going to do it here, towards the end of next week on into early following? And remember, it ought to be early following, ideally. So I think we got some upside here, but we'll just have to see how they respond to near the current record high. It may get a little choppy, sloppy on us, and we want to watch those upside objectives I just gave you, as well as watch Friday's low and the low of last week. Now let me quickly, I was looking at the intraday chart while speaking, and now I want to double check on the daily chart. Looks really good. 5-day average should now be support. So if they want to pop it down during the day, I'm fine with that. If it goes a little below, I'm fine with that. But my guess is it ought to be back above it over time. And we got the daily stochastic that really wasn't, it was somewhat oversold, but it's turning to a buy signal. It's catching up with Friday's rally. So I think it's looking good, and I think we might as well assume that we've got a chance for a record high. Now, additional upside objectives that may work in the next 1.5 weeks, and even if they don't, if they're too high, it may work by late December on into January, February. And those objectives are 47.62, 48.23, and 48.84. I think this market wants to ring the bell at 4,800, and that's going to be a very impressive performance. It may get that done by the end of this year, making it for an incredible year, okay? So I think we've got that kind of upside potential, and that's why I'm kind of downplaying this level 2 decline that's coming. I wonder how well it's going to work. I think the only way it can work well for the bears is people just got to get nervous over maybe the debt ceiling again, or there's just some little news that I cannot see coming, all right? Other than that, I think most of the weak holders sold back in September and October, and that was a seasonal down move anyways. There was a lot of betting that the seasonal down move would work. Seasonal meaning a certain time of year, it's mostly up or mostly down. November, December, seasonally, are some of the better up-month years, and we're seeing the better news and information, economics and statistics actually supporting that, and we're seeing it in earnings of these companies. All right, that's it for the stock market. Again, our risk point here is last week's low, if not Friday's low. Our objectives are still higher. There's a chance it could even be record high this week on into next week. And then I think we've got to look out for a setback in early December, but I wouldn't be surprised we're going to get a Santa Claus rally, and I wouldn't be surprised we're going to see 4,800 sometime now into January, February. Okay. Now, as far as some of the other outside markets here, we really don't have much going on the interest rate side. I'm still kind of puzzled. The interest rates are kind of this weak, and the model still prefers it ought to pick its head up bond price-wise. Actually, I should say the other way around. I feel as though interest rates should have gone higher than what they did, okay? But the way the bond pricing model is suggesting is maybe interest rates are going to back off some more. A little puzzled with that. Maybe they're just tired of hearing about inflation, and I do think we're making too big a deal of inflation. And I think the bonds and perhaps stock markets are telling us just that. The dollar should continue higher over the next few weeks. Bitcoin's probably going to continue higher right into early next year, but it is due for a dip sometime this week, next 2 weeks. But I think that's all it's going to be, a little dip, a little consolidation, a little resting. If it goes to a record high at any time, I think I want to, and in just the next few weeks, I think I want to get more serious about Bitcoin staying up for a couple of months. The gold market, I really don't have anything to say other than there's a good chance it's finally put in some kind of floor price and is probably going to work higher into late 2022 to 2023, and then it's going to have to start a major bear market, okay? So I think there could be some support, but I think this coming minor bull market that may, in fact, be inside of a lingering major bull market that could create a record high for gold, I'm a little suspicious we're going to wait a long time to get that record high. I think this is going to be a real struggling bull market, and it's quite possible it's not even in a bull market anymore. And proof of that would be a violation of this year's low. But my guess is, yes, it can find some firmness and hold up here and work higher over the next couple of years or something like that. Then the crude oil. I think we're in a long-term bear market. It may not be major, it may just be minor, but I think it can back off somewhat into next year. I still say it's only worth 76 to 72 bucks. We're around 79 now. I think it ought to work lower. I can be wrong during the winter if it gets too cold, specifically for heating oil, but not so much gasoline and not so much crude oil, believe it or not. And I think it ought to be over for natural gas, unless, of course, it gets to be a really cold winter. So that's where we are for a little morning brief here. Again, I got to stay bullish the stock market. I think it's going to continue to work higher. The level 4 interest swings can cause little setbacks during the day or even for a day, but I think this market's working higher for about a week, week and a half here, and then we'll reevaluate for a pullback in December. For those of you who really don't want to get caught up in too fast of trading, I almost feel like saying ignore this level 2, stay focused on the more important level 1 that's actually now bullish, should be bullish, into January, February. But again, I think we're still going to get some kind of setback early December. But right at the moment, at least for today, looking out through this week, I think there's more upside coming here, folks. But again, the level 4s will cause little dips along the way probably. Past results are not necessarily indicative of future results. I'm still bullish. Thank you.